All right, let's dive in. Today, we're going to look past the headlines and the new iPhones to really understand the technical story behind Apple stock. The charts are telling this fascinating story of just powerful momentum clashing with some hidden warning signs. So let's break it all down and see what it means for what could happen next.
Okay, so first things first, where is Apple right now? It's trading at 270.37, which is incredibly close to its 52-week high. I mean, think about it this way. It's sitting at over 93% of its entire range for the whole year. That right there is a huge signal that the momentum has just been unbelievably strong.
And yeah, that powerful upward trend, you just can't ignore it. But, and this is a big but, it's definitely not the whole story. See, if you dig just a little bit beneath the surface, the data starts to send some conflicting signals, and that paints a much more complex picture of what's going on.
So, before we get into the real nitty-gritty, let's just zoom out. What's the big picture? We're going to start with a simple scorecard for the stock's overall technical health.
And here it is. Apple is currently rocking a technical score of 75.59 out of 100. That puts it firmly in the strong category. Now, this isn't just some random number. It's a combination of dozens of different indicators. And a score this high is basically the market telling us that, from a technical point of view, the stock is in a really healthy spot.
Okay, so a strong score is great, but why is it so strong? Let's break down the bull case and really look at the indicators that show just how incredibly powerful this trend has been.
But before we get to the data, we gotta quickly cover a core concept: moving averages. Imagine trying to see the shape of a mountain through a shaky camera. A moving average basically smooths out all that shaky footage, so we get a much clearer picture of whether that mountain is actually trending up or down.
And what the data shows here is just a classic bullish alignment. It doesn't matter if we're looking at the simple moving average or the exponential one. That's the one that gives more weight to recent prices. The story is exactly the same. The short-term average is higher than the medium one, which is higher than the longer one. Think of it like a fleet of ships in formation. The fastest ones are way out front, which is a textbook sign of a healthy, accelerating uptrend.
Now, let's add another layer of proof with an indicator called the MACD. It's built specifically to measure the momentum of a trend, and all you really need to know is this. When the main MACD line is above its signal line, momentum is positive. And that green histogram at the bottom, that just confirms it. This is like a car that's not only moving forward, but is actively accelerating.
And hey, if you had any doubt about the consistency of this trend, check this out. The R-squared value here is 0.844. That's just a fancy way of saying the stock's upward path has been incredibly straight and predictable, not just some random walk. So this tells us the trend isn't just strong, it's statistically significant.
Okay, so the momentum case is clear. It's compelling. But now we have to pivot. We've got to look at the bear case, because hidden deep inside the volume data is a very subtle but very important warning sign.
Which leads us to a really crucial question. We know the price is going up. That's obvious. But is the buying pressure, the actual fuel for that move, is it as strong as it looks on the surface?
And this is where the story gets really complicated because we're seeing a divergence in the volume data. On the one hand, you've got on-balance volume. Just think of it like a running total of money flowing in versus out. And it looks super strong. It's like a piggy bank that's been steadily filled for a long time. But then, on the other hand, you have a different indicator that looks at more recent action. And it's telling a different story. It's suggesting some distribution or selling is happening. It's kind of like finding a small crack in that piggy bank, a subtle but pretty important warning sign.
So, you've got strong momentum fighting against some questionable volume. Where is the actual battlefield? Let's look at the key price levels that are going to define who wins this fight.
It all boils down to these two numbers. Think of 275.41 as the ceiling. For the bulls to prove they're still in complete control, they have to smash right through that level. On the flip side, 267.25, that's the floor. If the price falls below that, it signals weakness, and it means the bears are starting to gain some ground. This range, right here, is the battlefield.
So, we know the battlefield. How could this fight actually play out? Well, based on all the data, there are really three distinct scenarios that you're going to want to watch for.
Okay, path one is the bullish breakout. The price just powers through that 275.41 resistance and makes a run for the yearly highs. Then you have path two, neutral consolidation. The stock just kind of chops around between that support and resistance while the market figures out what to do next. And finally, path three, the bearish pullback. The price fails to break the ceiling, loses the floor at 267.25, and starts to head lower to test other support levels.
And that leaves us with the ultimate question. The momentum is undeniable, right? It's a powerful force pushing this stock higher. But the volume, the very lifeblood of a trend, is whispering a different story. So which voice should we listen to? Will the sheer force of momentum win? Or is this quiet warning in the volume data the first sign of a coming storm? That's the tension that makes this technical picture so compelling right now.